At 23 to the hour, let's see if Nhlakanipho you find him. Nhlakanipho. Good morning this morning.
Good morning, how are you?
I'm alright, how are you?
I'm good.
I was going to try looking after under the bed now. How was your holiday?
It was a good one, man. It was a good one. How was yours?
I was here, you know.
Mm.
Woke up, slept in the kitchen to make sure that, you don't oversleep, because holidays have got this thing of making you want to relax just a little bit too much.
Yeah, it makes you want to go on a vacation.
I tell you. And you suddenly realize that you seem to be the only one in your street who's going to work.
Looks like it.
But the whole thing about home loans, we as the people, as it were, do we understand the basics? And if not, how do we go about getting these basics right? And how long does it take an average person to say, I kind of know what I need to do, where to go, who to talk to?
So for home loan, it's for someone who doesn't know, a home loan is basically a loan that the bank gives you to purchase a property, right? And the best way, I would say, to get a better understanding on home loans and different interest rates and all of that is to make use of a bond originator. This is if you're looking to purchase a home. A bond originator is someone who can assist you in obtaining a home loan, where they then go to all the different banks to hopefully get you the best interest rate and get you a home loan approval. And then from the different banks, you will then choose to say, okay, this is the rates, this is the home loan that I want to go with. So basically, I'd say that's the first step. If you are looking to get a home loan, to get a bit more information from someone who's a bond originator, someone who can assist you with basically what they do on a daily, and they don't charge you for it, which is what makes it even better. They get their fee directly from the bank, and the fee is not passed on to you as a client.
Because that was usually the worry that, bond originator, I don't have money to pay them.
Yeah, definitely you don't pay them, because they get paid once let's say you with Bank X, you decide to take up a home loan with them, and you go through the bond originator. Since the bank will basically be making money in the form of interest over the next 20 years from you, they appreciate in showing their appreciation to the bond originator. They give them a fee. They pay them a set amount of money up front, and then you are never charged.
Then, can I be comfortable in hoping or believing that since I don't pay them, they get paid by the bank, they will get me the best possible deal, since they can talk to all the banks?
Yeah, well, that's their job, right? That's their job. Their job is to help you to get firstly a home loan, and then secondly get a home loan at the best possible interest rate. So you will see the different rates that the different banks will be offering you, and then you will take the lowest rate. Well, I should hope that you would take the lowest rate that you're being offered.
If you know what's going on there, because it's a minefield. Lots of information to go through.
Definitely. I think that's why it would be really good to preferably use a bond originator that has been referred or that you have heard of or know of, because then they can explain to you everything about the home loan process, because it is not something that everybody knows and understands. But if you are looking to get a deeper understanding on it, bond originator is a perfect person to start with.
Are there different types of loans, or it's just mortgage loan and off we go? Or maybe these loans would look at whether you're a first-time buyer or whether you're buying a second property, what your financial standing is, probably if you project 5 to 10 years or so?
Yeah, definitely. So the types of home loans that you basically can get is some one that has recently been introduced specifically for first-time home buyers, because it has been recognized that as a first-time home buyer, you might not have all the fees up front. So generally, if you do have a good credit score and you're a first-time home buyer, some banks will give you the full bond amount and you don't even have to put down a deposit. Already that's saving you, well, not saving you money necessarily, but it will assist you if you don't have the upfront fees. And on top of that, they can assist you in paying for your transfer fees or your bond registration fees as well. So this would be 105%, 110% loan. Something that was never really common, but more and more it is becoming common. So that's the type of loan definitely available for first-time home buyers. And then mainly the two types of loans that you really see are fixed, where the interest rate is fixed for the period, and also the variable interest rates. So a variable interest rate is basically, as we have seen here in South Africa, interest rates have been dropping, going lower and lower. So if you're someone who is using a variable interest rate, then you'll be benefiting from that, right? Because you'll be paying lower and lower interest. And then a fixed interest rate is where you and the bank agree on an interest rate today that will stay on your loan for the next 20 years. This is regardless of whether interest rates go up or down in the country. So if they go down, you will not benefit from the interest rates going down. However, if interest rates do increase and increase to a ridiculous amount, if you just fix your interest rate, then it also wouldn't affect you negatively.
See.
Yeah.
Which one do I choose?
It's basically going to be up to your risk appetite as well, because when you do fix an interest rate, because some questions that I've got recently is, since interest rates are so low in South Africa, can I fix my interest rate at the current low interest? And when a bank fixes the interest rates, remember, they're not stupid as well. They do recognize that interest rates are at an all-time low and probably not going to be at this rate for the next 20 years. So when they fix the interest rate, they will fix it at a higher rate than what it is right now. So let's say, for example, they will fix your interest rate at 11%. Now, you'll be missing out on the benefits of the low interest rates right now. But on the flip side, if you're a risk-averse person, then fixing your interest rate might be best for you. However, I just would never do it personally.
Yeah.
It is a bit tricky. It is a bit tricky to understand, I know. But yeah, it's up to you, man. It's on your risk appetite. If you fix it at a high interest rate and then interest rates just never increase, then you'll be kicking yourself for the next 20 years.
Is it better when there's a buyer's market or seller's market?
To fixing interest rates?
Yes.
I don't think necessarily you would look at whether it's a buyer's market or seller's market. The way I look at it is rather what is the risk of interest rates increasing over the next couple of years? That's an outlook that you'd have to make, to say, what are the chances that interest rates will go up to like 17% or something? I don't think that's something that's going to happen, considering the state of our economy. The consumer just cannot afford interest rates to go like that, because people will go bankrupt, organizations, companies will go bankrupt, and individuals as well. So I don't think it's in the best interest of our country for interest rates to go so high, considering the tough economic environment that we are in.
Now, something called the step-down home loan, Nhlakanipho, I tend to think that it sounds a little attractive for someone who's a novice at this.
Yeah, so the step-down home loan, something I've heard of a few times, where your interest rate will be decreasing over time. So over the period of your loan, your interest rates will maybe start at, let's say, 10%, and then a year later decrease to a certain percentage, and so forth and so forth. Honestly, I've never actually seen it being applied with anyone. I've never seen it being applied with anyone. I've never heard of a bank giving it to anyone. They're very reluctant to do so, because it is very, very risky for them as well. because of the uncertainty of interest rates in the next couple of years. Nobody really knows what's going to happen. Not even the Reserve Bank themselves can give you an answer to say this is what interest rates will be doing over the next 5 years. So, yeah.
I thought they had the magic wand. They could tell that. I suppose they do get stuck themselves.
Yeah, definitely. They do.
I have a WhatsApp message from David Sileboha out in Kimberley. He says, please ask Nhlakanipho about if there are penalties if you pay off your home loan before the contract ends.
If there are penalties if you pay off your home loan early?
Yes.
Not necessarily. Because your bond account is something that you can keep open. So just because you've paid off your home loan does not necessarily mean you close the bond account. So I might say no, there wouldn't be an incentive for the bank to penalize you when you are paying off your home loan. Just keep the account open if you have paid it off already, and it just stays open. It doesn't hurt you in any way. There's no interest charge that you'll incur as well because the balance will be zero.
So this is the time when they leave the door open so they can say, don't you want to do improvements on your house?
Yes, and then they offer you the opportunity to refinance.
Ah, okay. Very clever people there. Very clever people. Accountants and lawyers and people like yourself. Those are the friends to have. Now, but there's this talk around, obviously, there's a number of things that your bond originator does for you besides getting you the best deal and saving you money in the process. Because, initially many of us were very skeptical about a bond originator, but then one realizes that they're actually very, very important. They can read the fine print for you. They can navigate through the space of, filling out documents the right way and all of that. And obviously alerting you to the bank that best serves your financial position. When you get to pre-approval, because you say pre-approval, I get very excited. Is it a done deal or are we almost there?
Well, you're almost there because at the end of the day, you getting a pre-approval is basically saying you qualify to purchase a property of, let's say, R1 million. So, as I mentioned before, using the bond originator is really time saving as well because you don't go to every single bank and fill out an application form. Firstly, you just fill out one application form, and then the bond originator does the rest for you. So now, once you've been pre-approved for an amount, it's not a done deal. You still have the obligation on yourself to go look for a property, find the offer to purchase. And since you have this pre-approval with you, you do have certainty that a bank is willing to lend me money. A bank is willing to lend me money, and I'm able to qualify for this amount of money. So pre-approval is very important. However, it's not necessarily signing the deal for you to say it's closed. Definitely, you're getting this home loan. The bank will still need to perform a further credit assessments once you have signed your offer to purchase when you purchase the home.
So obviously, as soon as you have your pre-approval, then obviously it's either you talk to a seller or on a private capacity, you and I, or you engage the services of an estate agent.
Yes, that is correct.
Wow. Now, costs, Nhlakanipho. This is where it goes murky for many of us. Costs. How do you go about it? I mean, you have transfer costs, you have board registration costs, you've got conveyancing costs, you've got bank. Already I have a headache when I get to these.
Yes. So there are many costs involved when purchasing your property. Just as you had mentioned a few, it's your bond registration costs. So these costs are only applicable, firstly, if you are using bank financing and you're going to be registering a bond. If you're purchasing the property cash, then these fees won't be applicable to you, right? So that there'll be those fees, and then there's also the transfer costs that go to the conveyancers. So this fee basically is for them to to register the property for you and do all the things that lawyers get hired to do. You have those costs for conveyancing specifically. So the conveyancing costs and the bond registration costs are on a sliding scale, right? Kind of similar to your tax, where if you get paid more, you get taxed more. Similar with the property as well. So the more expensive the property, the higher the costs will be for conveyancing and the bond registration. And then further, we have transfer duty. Transfer duty is now a property, when a property is over R1 million, then you don't pay transfer duty. I know there was a bit of a mix-up last year when the Minister of Finance mentioned that increasing the threshold from 900,000 to R1 million. A lot of people assume that there's no transfer costs that are going to be paid. However, the minister was specifically speaking to transfer duty. So this is an amount that gets paid over to SARS. So the transfer duty is an amount that you pay to SARS for purchasing a property above R1 million.
Because that's how some of us read it, to say if you're below R1 million, you're safe. But if you're just above R1 million, then that's when it starts biting.
Yeah, unfortunately not. It is, transfer duty is a fee that is specifically paid to SARS, and that won't be applicable if you're purchasing a property less than R1 million. Not to say that all costs, transferring costs will not be applicable when you're purchasing a property.
Are these costs negotiable across the board, or it's just what the law says?
Well, the transfer duty is not negotiable. That's like you're paying SARS money for, so they also have it on a sliding scale as well. So that is not negotiable. However, you can negotiate the other fees with your conveyancers and so forth, because I know some conveyancers even give you a discount if you're regular clients with them, or maybe for first-time buyers, they might say they're going to give you 50% off. So, yeah, definitely you can negotiate some of those fees. However, the transfer duty is not negotiable.
Hey, so really and truly buying a property, there's a lot you got to consider. If you are most probably looking at a house worth about R1 million, you should probably you should be budgeting around 1.3 million to cover everything else and still be in a comfortable space, as it were.
Yeah. There is really a lot of costs involved. Not even to mention the costs after you actually own the property, because you might have moving costs to move in. There might be certain repairs and maintenance that you might need to do to the property here and there, just to make it look appealing, maybe to fit your style. There are a lot of costs involved in purchasing a property, and it's definitely not something you should go into with your eyes closed. You consult with people who've purchased property before, estate agents, bond originators. All these professionals are people who are there to help. It's their job to assist us in being able to make the best decisions financially for ourselves. There's no point in not utilizing these professionals, because a lot of them don't even charge a fee until a transaction is concluded. So definitely make use of the bond originators and your estate agents.
Indeed. Quickly, but Nhlakanipho, are there ways to get to the finish line much quicker than the budgeted time in terms of
paying off your loan?
Yes,
definitely. You can request your bank to take a bit more than what is required. So if your bond payment is 4,000 rand a month, you can request the bank to take 5,000 rand a month. You can pay that additional 1,000 rand in the account yourself. So there's many different ways in which you can start learning and teaching yourself how to better pay off your bond. Those additional monies that you get here and there for a bonus at work, or maybe you worked overtime, take a bit of that money and put it away into your bond. A lot of banks actually allow you to be able to access that money even. So that makes it even better, so that it's a way for you to save money while saving interest on the loan that you're repaying to the bank. So any additional income that you get from a business that you started, overtime at work or bonuses, take that money and put it into your bond account. And it's a way in which you can save money and you can still access it if you need it for an emergency one day. So I think that's the best way to actually save money, is to save it in your bond, because the interest you'll pay will be less, and over time, that interest payments that you make into the bank will be significantly less. Because as I'd mentioned, I think before, the interest you pay over 20 years is actually more than the amount that you borrowed in a lot of cases. So if you borrowed 500,000 from the bank, you might find yourself paying over 20 years 1.2 million. So definitely start saving money in your bond accounts.
Nhlakanipho, you're my new best friend. I tell you, you're my new best friend. The education, invaluable, priceless.
Pleasure.
We can also find you on YouTube, by the way, quickly.
Yes. You can find me on YouTube, my full name, Ntombela. If you have any questions for me, feel free to send me a DM on Instagram or Facebook at @IM_Ntombela.
IM_Ntombela.
Yes.
Nhlakanipho, once again, a pleasure. Have yourself a fabulous first day at work and enjoy the rest of the week.
Thanks, brother. You too.
Have a good one. Yeah, wish we had more time, but time flies. If it is your birthday today, happy birthday. Remember Instagram, Facebook, IM_Ntombela. You'll get a lot more from Nhlakanipho Ntombela.